Today is going to be a continuation of what we've been doing already for the first-time home buyers. Today we're going to be talking about know how much you can afford. This should help you figure out exactly what the banks are looking for or what your mortgage lender is looking for. As we mentioned, what we're trying to do is get you pre-qualified, and we're going to look at what do lenders look at. Now, in the process of getting pre-qualified, before you start looking at houses, and this is extremely important, before you start looking at houses, work with your loan officer to get pre-qualified, which will let you know how much home you can afford. This can help you narrow your home search to houses within your budget, give you an idea of how much you'll need for a down payment, and help you identify budgeting goals to work toward. To determine the loan amount you can qualify for, your lender will look at your income, debts, savings, and assets. As a rule of thumb, your monthly housing expense should not exceed 28% of your gross monthly income. While getting pre-qualified can be a big advantage during your home search, it's not a guarantee for a loan. Getting approved for a mortgage happens later in the process. Jump to page 4.2 to learn more about the mortgage application approval process. Now, what are lenders looking at? Let's start with the 4 C's of credit. Character. Character represents your credit history or financial integrity. Your credit score, how much credit you've used in the past, and whether you make your payments on time are examples of your financial integrity. Number 2, capacity. Capacity represents your ability to repay a loan. The amount of your income and assets are compared against your monthly debts to make sure you can afford a loan. 3, collateral is the asset securing the loan. In other words, the value of the home itself. If you default on your payments, the home can be repossessed by the lender. 4, capital. Capital is how much money you're able to invest in the collateral, represented by your down payment. The amount of capital you contribute shows how you have skin in the game and reduces your risk to the lender. Now let's talk about understanding loan to value, or LTV. LTV expresses how much you're borrowing compared to the value of the home. A lower LTV is more favorable because it represents less risk to the lender. The ratio is calculated as follows: amount borrowed divided by the appraised value of the property. That gives you your loan to value, or LTV. Now again, using simple numbers, if you take $90,000 and you divide it by $100,000, meaning you're going to have a loan for $90,000 and the house appraises for $100,000, you have a 90% LTV, or loan to value. The higher your down payment, the lower your LTV. This is important because LTV higher than 80%, in other words, a down payment less than 20%, typically means you'll have to pay mortgage insurance. Now let's try to get to where we understand our debt to income ratio, or DTI. Where that comes from is you take your total recurring monthly debt, and that's car notes, any other property notes. All those debts are divided by your gross monthly income, and that gives us your DTI. Now, in order to figure it out for everything, we include the new house payment, your mortgage insurance, your homeowner's insurance, and your property taxes. All that's added to your total recurring monthly debt, because it actually is going to be a total recurring monthly debt, and divide it by your gross monthly income. Easy numbers. Say you've got $2,000 worth of debt now, and you make $6,000. 2 divided by 6 gives you 33% debt to income. Now again, once we say you add a $1,000 or $2,000 house note to that, as you can see real quick, $1,000 puts it at a DTI, or debt to income ratio, of 50%, which typically is a no-go. So just so you'll be aware. Now again, we have more coming up behind this one. We're just trying to keep these short. So watch for the next one. It'll be coming out not so long. This one was a little delayed, and I apologize for that, but the next one will be coming out in the next day or so. If you like what you're seeing, please hit subscribe, like, share, send it to all your friends, send it to all your enemies. We appreciate everything you do, and we hope you appreciate what we're doing for you. Again, hit like, share, and send it to yourself and send it to everybody. If you have any questions, look below. You can ask your questions there, or you can text me or call at 251-752-2262.